Well, we've seen stocks finally down on Friday. We see gold and bonds up as we end the week, but let's jump into the weekly chart and see what happened throughout the week. What we see happening on the S&P 500 is we have a green up candle. The first really green up candle we've had since a sideways slide started back on the 9th of November, the week ending then. That went on for a few weeks, and then things really started dropping off steeply, starting the week ending the 14th of December, went for 3 weeks, and then sort of bottomed out and up over the past week. Derivative oscillator losing downward momentum. Price percent oscillator is heading up. Now we go from the weekly chart to break it down and see what went on over the last 2 days. We've had now 3 up candles, and the latest candle closed, and this is interesting to watch here. When you look at this latest up candle, going to move over, we see when we look at the wick on the candle from back on Wednesday, ending both that would represent Tuesday and Wednesday, and then the one representing Thursday and Friday, things have topped out in about the same place. Now, we have a blue vertical line there signifying that there was a weekly vertical crossover, a 2-day vertical crossover for the 2-day candle ending Wednesday, the 9th of January. So this latest move is basically sort of a leveling out. Remember, weekly chart still in a confirmed down move, 2-day chart's in a confirmed up move since that 2-day candle ending on the 9th of January. So as we dig a little deeper, derivative oscillator, let me make sure to tell you what's going on so you can put this on your weekly worksheet. What we see going on as far as the comprehensive review and forecast we're bringing you today is we do see on that latest 2-day candle, we have the derivative oscillator gaining upward momentum, price percent oscillator heading up. Then we go to that 4-hour chart where we dig a little deeper, and that's where we see the sideways slide really occurring over the last almost 3 days, really. And what we had happening on Wednesday, Thursday, and Friday is, again, tending up, but pretty much sliding sideways. In fact, things never went above where they topped out all the way back on the afternoon of Wednesday, the 9th, and just a little above where they were that morning. So what's going on? Derivative oscillators losing upward momentum on the 4-hour chart. Price percent oscillators flat. Let's just keep an eye on things as the new week starts and see if indeed this bump up that on our 4-hour chart started in the morning on Wednesday the 26th. Let's just see if this latest bump up is losing its momentum and getting ready to bump over. That is turned down. So we'll just watch. Doesn't give us a play immediately because remember our 2-day chart is in a confirmed up move right now. We're going to have to have that cross back over, but we will nonetheless monitor and watch and see what we see on the S&P 500. Again, down for the day, just barely 0.03%, up for the week. What do we see going on QQQ? That's the NASDAQ 100. Derivative oscillator on the weekly charts losing downward momentum. Price percent oscillators heading up, but still quite a ways from a crossover going up, meaning that, of course, the market is still in a confirmed down move on our largest chart. And what do we see going on as far as price movement? The Heikin Ashi candlestick, it's a green up candle, biggest one we've seen since all the way back on the 31st, the week ending the 31st of August. And that's sort of where the market was topping off and sliding sideways starting then. What do we see going on now? Well, price movement stopped right there at the weekly trend line. So again, we'll see what's really going to shake out in all this. 2-day chart, of course, crossed over going up back on the 2-day candle ending Wednesday, the 9th of January. And again, just like we saw, going to move our vertical crossover over a little bit so we can look at the wicks, just like we saw. The top wicks on the Wednesday and the Friday 2-day candles are about at the same point. Derivative oscillator gaining upward momentum, price percent oscillator heading up. Let's look at that 4-hour chart. About the same thing that we saw with the NASDAQ, with the S&P 500, we see with the NASDAQ 100. Things sort of topped out around Wednesday morning and sliding sideways since then. Could just be the market sort of resting, gathering its strength to jump up again. Could be the market wearing out. We don't know, so we're not guessing, my friends. What we are paying attention to, though, is we're going to see just where things go. Now, we don't have a trade at this point if the 4-hour crosses over going down because the weekly's down, the 2 days up. 2-day is going to have to cross over going down. But we do see the derivative oscillator weakening, and we see the price percent oscillator sliding sideways. So we'll watch, see what we see. Just be paying attention. If there's some huge down moves over the course of this next week, it could actually pull over that 2-day chart on both the S&P 500 and the Qs. We'll keep our eyes open for what happens. Hey, what's going on 20-year bonds? Well, ended the week with a red open box candle. What does that mean as far as Heikin Ashi candlesticks goes? It's not a red solid box, which means strong down moves like we saw starting for the weekly candle ending the 7th of September and going all the way through the weekly candle ending the 12th of October. Those were strong down moves. Wicks on the bottom, no wicks on top, solid red. What we see in the latest candle is basically a cautionary candle. We can see that price movement never went above where that prior week was. That red open box is telling us things have slowed down pretty significantly. Derivative oscillators lost energy. Price percent oscillators slowed down, but still not anywhere close to crossing over, going down. Price movement is right there pushing through the weekly trend line, and that had been a strong 5-week uptrend. So let's dig a little deeper. What's going on the 2-day chart? Well, going into our third down candle, second really strong down candle, 4 days of strong down movement. The derivative oscillator's negative. Price percent oscillator's not crossed over going down, but is getting really close to that. That may happen over the course of the next week and may prevent you from getting into any up moves if there is a crossover going down. But let's look at the 4-hour chart. Is it potentially bottoming out? Well, we see basically 3 periods, 3 4-hour periods, so in a day and a half of slowdown. Does that mean things are about to reverse? Not necessarily, but if they do, you still got a lengthy derivative oscillator. It's got to lose a lot of energy before we would be expecting a solid crossover going up. Could happen over the course of this next week. Watch for it. The 2-day still in a confirmed up move, and the weekly will stay that way most likely unless there's some crazy crashing. Then, of course, you could potentially see bonds crossover going up. You might have a trade. So keep that in your notes. Be ready to do a practice trade if indeed that occurs. Lastly, we go to gold. Oh, and by the way, TLT, 20-year bonds up 0.39%, gold up 0.17%. Now, gold still strong as far as the derivative oscillator and the price percent oscillators go. We look at the 4-hour chart, the weekly chart, and what we see over the course of these 6 weeks is as this latest week has been forming, let's look again at the importance of paying attention to the candle wicks. And we see the wick the prior week topped out this last one. Now closing that we see on the candles, remember everything on Heikin Ashi candlesticks calculated differently. The candle itself is above, but we see that wick is actually stronger in the prior week. So we see some weakening there. Again, a decent trend line, things going up. And up for the day, 0.17%. Let's delve a little deeper, see what we see. We can see that bearing out as we look over the last 8 days with the candles on the 2-day chart. We see things really topped out back on the 2-day candle ending Thursday, the 3rd of January. And really, price movement hasn't gotten as high as the wick goes, or hardly even the candlestick. Yeah, it just barely did at the end of the day on Friday. But the derivative oscillator started losing momentum since then. The price percent oscillator is heading down. So again, some weakening we see with the sideways slide. Again, could just be digesting gains, getting ready to pop up again strong. So watch that, pay attention to it, but also look at that price percent oscillator heading down, derivative oscillator losing momentum. Look on the 4-hour chart, still negative. What are we waiting for? Well, 4-hour chart's going to have to cross over going up. Derivative oscillator's been flat over the last day and a half. Price percent oscillator's heading down. So if over the course of the next week we see a crossover going up and the 2-day chart and the weekly are still positive, then of course we could jump into an up move in gold. So watch that. Mark that in your notes also for the coming week. That's what we'll be looking for. Folks, thank you again for being with us. If you're not a Patreon sponsor, please do so. I mailed out a massive amount of books and traders' journals today. 8th printing of the book. Thank you everyone who's ordered it. All those orders were fulfilled and put out today, the last ones that came in. So thank you so much. You want to order the book? please look in the show notes. You'll see a link where you can do that. You can also order the Trader's Journals. We have those available. You can get those for free if you just want to print them out on your own. We give you a spiral bound one, really nice card stock on the front and back end of it, 3 months worth of it. You can get a discount for ordering a year's worth. Also, we give you a $25 off if you subscribe to TC2000, the kind of charting software that we use here, web-based. Fabulous stuff. It works great, the best I know of. A lot of people write me all the time saying, Tom, can I use your charts on this software or that software? And I'm like, hey man, why are you not using the best in the world? And that is the Warden Brothers TC2000 free version is there available again for a link for you in the show notes. And we do appreciate those of you who have been kind enough to be a Patreon sponsor. Remember, we do all of this for free, and we so appreciate you guys who get out there and support us. There is a lot of work and grease, muscle that goes into this thing to make it happen, and we sure appreciate everyone who appreciates us. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.